traders most of the time are focusing on this probability. All right, so what is the probability? Probability is just the number of favorable outcomes out of total outcomes. All right, so I'll give you an example of a dice. So let's say dice has 6 sides. All right, and there are number returns from 1 to 6. So if I ask you what is the probability of number 2 turning on top of the dice, if you roll it, then possibility of this outcome is just 1 and the total outcomes are 6. So this becomes your probability for getting the number 2. Now if I ask you what is the probability of getting an even number, so there are 2, 4 and 6, there are 3 even numbers, so total outcomes, favorable outcomes 3, total outcomes 6, so your probability becomes 1 by 2. This is the simplest way to explain probability, but in markets the probability in itself does not mean anything. So why I'm saying that, let's say obviously you can see that this outcome has a lower probability and this even number, or let us switch it up and make it an odd number. It still remains the same because there are 1, 3 and 5, 3 odd numbers, and the probability of odd numbers, this is much higher. You can get 3 favorable outcomes against just 1 favorable outcome. Now if I say that okay, you are playing dice, we are betting on it. Now if I say I am the casino, you are the gambler. Now if I say, like, if you get this outcome, you get 2 number on the top, all right, so you are going to win 1000 rupees. Okay, if you get any of the odd numbers, right, any of the odd numbers, you are going to win 100 rupees. To bet on this, the cost is 500 rupees, and to bet on this, the cost is 50 rupees. So your minimum bet is 50, you will win 100. Here your minimum bet is 500, but you will win 1000. All right, now forget about this winning part. We are looking at risk. Okay, why? Because we are risk managers. We are here to make money, but we know that we can only make money if we can manage our risks properly. So if I bet on this outcome, all right, what are the chances? 1 in 6 I am likely to win. And how much I am going to win? 500. Sorry, in this case I am going to win 1000, but I am going to lose 500. Make sense? So 5 out of 6 times I am losing 500. 1 out of 6 times I am making 1000. All right, now let us calculate the outcome, so to speak. So what is the outcome? Outcome is addition of favorable outcomes plus unfavorable outcomes. So in this case I am losing this 500 rupees 5 out of 6 times. So if I multiply the probability with the profit and loss, I will get outcome for this particular bet. So I'll have to do some calculations. That is 83 into 5, roughly I'm calculating roughly, right? So this is 415, and what is this? This becomes 16. So what is happening is, if I win this, if I multiply this probability with the total profit, on an average I am likely to win 166 rupees. On an average I am likely to lose 415 rupees. So this is my loss and this is my profit. So if I now calculate, what am I left with? All right, this is 9 and this is 4 and this is 349. So if I take, say, on an average, if I take multiple bets with this particular calculation, I am likely to lose 349 rupees on an average or in the long term, right? So if I come to this and try to do the calculation, same calculation, 50% of the time I am losing 100 rupees. So same thing, 1 by 2 into 100, I am making 50. I am making 50, and if I lose, I am losing again same 50% of the time I am losing 50. So the outcome is minus 25. Now if I add this, what am I getting? I am getting a plus 25 profit here. Make sense? So this is how we calculate outcome. So how do you calculate outcome? The formula is simple. You multiply probability with the quantum of profit and loss, right? Now here what is happening is, if the probabilities are in your favor, so let's say you have a 90% chance of winning 1 rupee, okay, so probability is 0.9 and you are likely to win 1 rupee, so that the outcome is 0.9 plus, right? But there is a 10% chance that you will lose 1000 rupees. So there is a 10% chance that you will lose 1000 rupees. So if I do the multiplication, this is like this. So what is happening is that even if you have 90% chance of winning, even if you win say 10 rupees, this still becomes 9 and you are still losing 100. So this is an unfavorable outcome, because if I do the addition, I get minus 91. All right. So people are going after the hit ratio or win ratio, and that is where they are making a mistake. You do not just have to look at this, you also have to look at this. If I reverse this, let's say if I take this trade, 90% of the time I am losing 10 rupees, but there is a chance that 10% chance that I will win 1000 rupees. Now what is happening? I am losing on an average 9 rupees, but I am winning 100. So now my outcome is positive 91. So this strategy becomes great. So if I take 100 trades, I will have to work out 90 losing trades. I have to stay with them. But then those 10 trades that are going to give me the profit, that are going to give me huge profit, and on balance I am going to win. So why I put you through all this difficult calculation is, whenever you are at an inflection point, all right, what you need to make sure here is, if the market falls, it is likely to fall much, right, higher amount than it is likely to rise if it goes higher. Make sense? So what I am trying to do here is, I am trying to make you aware of the quantum of the loss or profit. So if you are a buyer here and the market goes higher, you are making less. But if you are a buyer and market goes lower, you are losing huge amount. Obviously you will lose only your stop loss, but I am talking about the market movement. Now let's, whatever the probabilities are, let's say we know that the probability is, let's say 50%. Okay, either it will go higher or lower. Simple. There are only two outcomes, and there is a sideways outcome, but let us ignore that for a moment. So there are only two outcomes, 50-50. Now how much money you are going to make if it goes higher, and how much money you can make if it goes lower, that is the point of distinction that you need to focus on. Even though the probability is same, the quantum of the move, if it goes higher, how high it is going to go, and if it goes lower, how low is it going to go, should decide whether you are going to buy or sell.